You are listening to chartingwealth.com for Friday, the 6th of May, 2016. We always jump into the market with IYY, which is the iShares Dow Jones U.S. Total Market Index Fund, so it represents the entire market. What do we see going on? We see some major down moves occurring. Now, over the course of Thursday, down move wasn't that great. It was 0.04%, but that is on the heels of three big down two-day candles, a rotation over on our MACD moving average convergence divergence chart on the 28th, down strong. Derivative oscillator flipped over on the 4th. So we have three good candles with strong down movement and lower wicks. We will continue to monitor the market as it moves through the end of the week. Now, what do we actually see going on our half-day or 4-hour chart? We see that the market was up a little bit in the morning and then down in the afternoon. It was actually down further at the somewhere during the afternoon and then got pushed back up so that it didn't go down as far as it originally had made it. We see derivative oscillators losing a little bit of its speed. The MACD and the signal line are still separated. We don't show them coming together yet. What do we want to see? Well, we'd like to see a little bit of back off on this down move and perhaps a crossover going up on the short chart so that when it crossed over again going down, as the chart crossed over going down around the 22nd of April, we could jump in and ride that down movement. Now, I'm giving you that 22nd of April only because it's a crossover going down again after a movement up. Not that that was an actual entry point at that time. We're talking about where the market is now. It is in a confirmed down move as it has been on the short chart since way before the big chart crossed over. That's always the way it is. Almost always. Sometimes they actually cross over at the same time. When that occurs, good sign to get in. That's typically, though, on a lot of massive down movement, and it's hard to find an entry point. But if you see it all happen at the same time and you're aware of that, can find a good entry point, absolutely. So what do we see going on? We see the market continued in down moves. It's slipping sideways a little bit. And again, if we can get a bit of a peak up, and we had a bit of a stall in the morning, maybe that's going to happen and we can find a chance to get in. You might say, well, why didn't we get in way back on the 22nd? Or why didn't we get in when the market turned over and started going down on the 28th? Well, that was because finding a good solid entry point is typically where you have some problems. Sometimes the market will fool you. It'll look like it's about to cross, then it'll not do that. So we'll continue to monitor. Now, as we move to the S&P 500, which is our next chart shown by SPY, we can see that we have 5 good down candles. We have a derivative, we have a trend line that connects 3 of those, derivative oscillators in the negative, and we had a crossover going down on the 28th. Now, here's where I want to jump back in because there are people who are listening to the program, and we appreciate you listening in the large numbers that you do, who say, wait a minute, why would anybody get into the market when it's going down? Well, here's an example. On SPY, there is an inverse fund, an inverse exchange traded fund that tracks the S&P 500. It's the ProShares short S&P 500. What does that mean? Watch the magic of this. When I go to that symbol, and those of you who are simply listening by audio, here's what's happening. The market that was going down in the S&P 500 is represented by SPY. When we put into our charts, our freestockcharts.com charts, SH, we had the market actually flip around. It started going up around the 28th when the crossover occurred. Why? Because it is an inverse fund. It is a short of the S&P 500, meaning that you can go in and virtually, and again, we're not a stock calling service. We're not telling you we're not giving you any advice about trading real money. We're an education firm. We're talking about you practicing. But you can practice buying into an inverse fund when the index you're looking at rolls over and starts going down. You can go into the inverse fund because guess what? It goes up. You got it. When we look at the Qs actually has an inverse fund. I mean, and there are others. They're not just the ones I'm showing you right here. There's an inverse fund in the Qs. I believe it's a double inverse. It's the ultra short. It's 2 times. It rotates over going up for the Qs when the Qs goes down. So keep that in mind. The smart folks can make money when the market's going up or down. Isn't that fascinating? Now we're going to go back to the S&P 500. Again, we said there's 5 down candles on that. If we look at the intraday chart, that is the 4-hour chart, 2 of those each day. What do we see going on? Up in the morning, down a little in the afternoon. Again, the S&P 500 barely down 0.02%, so 0.2%. So maybe we'll see that roll back, and we'll see if that happens, and we can actually find a get-in point for continued down moves. We'll tell you when we see that happening. Now let's go back to our 2-day chart, and the last index we're going to look at is the Qs. It was down 0.03%. Strong, big down movement over 6 candles representing 12 days. Well, really, it's just the first day of the candle forming on the 5th of May, so it's not actually 12 days, it's 11 days so far. We'll see how that candle finishes out when the market closes on Friday. Now, if we look intraday, what do we see going on? We see on the half-day chart, the Qs has slid sideways for 2 days between the 2nd and the 3rd. Then it dropped over some on the 4th and is really on the end of the 4th and throughout the 5th, it pretty much slid sideways. We may be getting a crossover going up soon. If that happens, then of course, if the big chart continues to be in a down move, then of course we'll look to jump in on that, won't we, when it crosses back over. And again, what would you jump in on? Something like QID. So you would go in and do yourself a virtual trade, a virtual purchase of QID shares. And again, that is an inverse fund. It's called an ultra short because I believe it's 2 times. It goes at the pace of 2 times. For every dollar that the Qs goes down, that inverse fund goes up $2 basically. So let's now go from there. We're going to go over now and look at gold. We're going to go first to the 2-day chart on gold. Gold crossed over going up back on the 2nd of May. We have the derivative oscillator flipping over just about the same time. We saw gold surge up on the 2-day candle on the 2nd, and then it's really done nothing more than slid sideways since then. It hasn't reached that high again that it reached on the 2nd. It has actually broken the very poor 2-day trend line that we've drawn in gold. It's busted through that. And if we have to sort of draw our trend line past where the crossover occurred. We could try connecting the 2 green candles, the one on the 28th and on the 2nd. The problem is the chart didn't cross over until the 2nd, so going back and drawing prior to the crossover is not the best charting practice for drawing trend lines. You could do it if you wanted to try to make your trend run out further, but that's a warning. When you violate your trend line, you can't really draw a good one. Hasn't crossed over going down yet on the 2-day chart, but it's not showing a lot of strong effort to keep pushing up. But again, it did go up so much it pushed out of its own Bollinger Bands. Bollinger Bands are volatility bands that follow whatever the index, the commodity, the stock, the ETF is that you're tracking. And typically, well, when you go outside the volatility band, you've got to pull back in, and that's what we have seen occur. Let's look at what happened intraday. What do we see? Well, we see that we've crossed over going down on gold on the 4-hour chart. That occurred at the same time, the crossover on the MACD, same time that we saw derivative oscillator crossover. It closed just a little below the 2-day trend line. We'll see if that down movement continues. And again, remember, gold is in a confirmed up move on the big chart. So if we see this chart that's already crossed over on the short chart going down start to move back up and cross over again in the same direction as the big chart, you look to, boom, get into that move with a virtual trade. or a virtual purchase of an ETF like GLD, because it is going in the direction of up. It is not an inverse. There are inverses in gold too that you can look to purchase. So that is where we have ended the day on Thursday as we go into Friday, the 6th of May. We sure appreciate you being with us. If you got questions, concerns, issues, go to our website. Fire us off an email. We're glad to hear from you. Sign up for our newsletter that includes the video of our reviews every day, plus our weekly review and forecast that comes out sometime over the weekend prior to the beginning of the new week. And we're here for you. We love to hear from you. Thank you so much. If you want to help us out, do one thing for us. Go to iTunes, give us a 5-star rating, say something nice about us, and follow us on any of those other platforms that you like, as well as our website, chartingwealth.com. Thank you. Hope that you end the week on a high and profitable note.